Hi, and welcome to my next War and Markets episode. Well, another very interesting day in the markets where the microcaps, small caps, and mid caps outperformed the Nifty. The Nifty was marginally negative, but all these three indices were positive, with microcap up 1%. That's fact number one. Fact number two was all the indices started with a gap up, dropped mid session, and then recovered, but the Nifty couldn't recover enough to turn into the green. That was the second thing. Third, today was the advanced decline ratio. Again, like yesterday, a very strong advanced decline, almost 2,000 stocks up and about 1,000 stocks down. So clearly indicates massive retail participation. Then what is the next fact? The next fact is that FIS continue to be buyers, yes, marginally, 300 or 400 crores, but still it shows that they are becoming less bearish about India. And in fact, the total volume of their business today went up to 43,000 crores, which means almost about 20,000 crores of buying and 20,000 crores of selling. So heavy activity. We'll see what they bought and what they sold. But clearly, if you combine this with the F&O action, where you see the long-short ratio actually improved from 31 to 34, which means they're becoming longs are increasing, means they are less bearish, supported by the put call ratio going from above 1 point, I think it was 1.18 yesterday to 0.92 today, which means again a less bearish start. So clearly, first takeaway, FIs are becoming less bearish and becoming more comfortable with the situation in India. I'll talk a little bit more in detail a little later. But DIIs was the massive surprise on the negative side. Yesterday they sold 566 crores. Today they sold 3,400 crores. So can you see such a strong divergence? The three main players in the market are FIS, DIS, and retail stock HNIs. FIS are turning less bearish, reasonably bullish. Retail is obviously very bullish because 2000 to 1000 advanced decline ratio, but DIIs are heavy sellers. Now, does it mean they are bearish about India? No, 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 no. I think if you remember what we've been discussing it all these days, this is the period when the DIs are trying to build up their cash so that when the earnings season comes through and there is clarity on which sectors and stocks are going to have a good future, the guidance, they want to have cash ready to buy. So they are viewing this short bounce back as a time to book profits and generate cash. That's their tactical behavior. So it's not fair to say the DIs are turned bearish on India. Far from it. So then you look at the sector allocation, some of this plays out and bears out. So what are the sectors which were hit heavily today? PSU banks and private banks and auto. And just go back and take a look at the 1 year returns. That's where the PSU banks and auto was probably among the best performing with 20 plus returns. So there's a lot of profit there to be booked, less so in the private banks, but they are booking profits where they are seeing the money and then they are keeping it as cash. They will do a little bit of buying, obviously. This 3,400 crore is the net number. And then what are the good performing index today was IT. So clearly what it means, then the IT buying was probably from the FIIs. And then dig deeper into why did the FIIs buy IT? And looks like they also might have sold the banks because they are the big part of the index, right? So they sold IT and I looked at the rupee. The rupee was stable at mid 93 levels. So then why this sudden buying in IT? Well, it's the currency hedge. What do you mean by that? When FIs are putting money into India, right, they are looking at is the rupee going to weaken for let's say the next 6 months to 1 year, and then they buy IT to hedge their position in India. So that's what I suspect has happened today, because when I looked at the 1 year forward premier and the 6 year forward premier, 6 months forward premier, from a 93 level for 6 months, it's the rupee is looking at the mid 95 levels, and for 1 year it's well above 96. So clearly about 315 basis points of increase. So that then tells you that this strengthening of the rupee, as we have discussed before, was the RBI's administrative action and heavy those. And of course, the international situation, oil remains stable at about 96. So from that point of view, clearly, right, IT is seen as a hedge against the currency weakening, and FIs, whatever they are buying, they're buying significant amounts of IT as a defensive posture. Right? I told you earlier also that IT is now more of a value buy. So very, very fascinating set of numbers today. And let's look at the geopolitics front. Well, Mr. Trump, and if you look at the tweets yesterday, what we spoke about, that the war is moving from a military war to an economic war. And using the whatever the blockade of the straits and all, they're trying to put pressure on Iran. And I think some of the positivity comes from the fact that Iran may be able to fight a military battle, but how long can they sustain an economic battle? The market corrected midday today, probably because the middle Pakistan said there's no clarity about the next set of talks which we spoke about yesterday. So those volatility factors will be there affecting the market. So very interesting day, good analysis, but what I say is that for the future, this is again retail. Now, again, the question arises, right? When retail is buying, are they retail investors buying or retail traders? Well, you can't know that. So today, maybe some of the profit booking in the middle of the day was retail traders booking profits. And maybe by the end of the day, buying was a fresh set of retail traders, stroke investors buying. We cannot analyze that in any great detail, but from an investor's perspective, nothing changes. The volatility is going to continue. The war is still not showing a clarity in terms of an end. There are multiple news flows happening, some news, some good news, some real news, and some fake news. So don't get confused about this. Clearly, FIs, to summarize my view, FIs are turning less bearish, slightly bullish, 300 odd crores or something of buying. Retail believes that the pricing is overdone, the market correction. They feel they want to come in an average, and some of the punters feel this is a good time to take a bet. DIs are generating cash to buy the right sectors as the earnings season pans out. Sitting here today, we wouldn't know which earnings or which sector is going to come look good from a guidance perspective. So my suggestion to all of you is the same, no change. Diversify, but accumulate, but stagger, right? So you can put this in any way. Maybe I should say it as accumulate, stagger, diversify. ASD. Stick to that. Whatever the percentage I've been saying, 1%, we can increase that maybe to 1.25 because it's going up. But just spread out your cash in a diversified manner across all the happenings in the market are really supporting, because when the DIs come in and buy, those sectors will rally. But you wouldn't know that. Even the DIs wouldn't know that. That's why they're waiting. So just stick to that. Diversify. Why? Because you don't know which sectors are going to really come out the winners. Stagger, because there's going to be continued volatility. Accumulate, because the market is still way above its lifetime high. Way below, sorry. A slip of tongue. 26,200 lifetime high, we're still hovering on the mid 24,000. So long way to go for the market. So keep accumulating through this period. Thank you. I hope you enjoyed the analysis today. And thank you for all of your feedback saying that the voice clarity and the sound tone is now very good. More than 95% of you all have said, hundreds of responses. Thank you for that. All the best. Look forward to my next episode.